Infotech Enterprises joining us right now. Mr. Krishna Bodanapu, who's the president and CEO of the company, joins us on the show. Thanks very much for speaking with us, Krishna. First up, you have met your guidance of about 30% growth in FY12. And in the press conference or the press release, you said you were equally confident of a good growth in FY13. What kind of growth are you targeting for this financial year? And will it be volume driven, you think?
Yes, absolutely. What we said yesterday was that our growth this financial year will be higher than what the industry average will be. The industry average, as NASSCOM is guiding, is somewhere between 11 and 14%. So what we believe is our growth will be higher than the 14% number. Again, we don't give guidance, so I can't get into the specifics of what it will be, but it will definitely be higher than the 14% number that NASSCOM is targeting as the industry average. In terms of where the growth will come from, typically in any given year, about 1 to 2% of the growth has come from price increases, while the rest of it has come from volume increases. So we believe it will again be in the same range. I mean, most of the growth will have to come from volume increases. Again, exchange rate has not been factored into it because that's really out of our control. So when I say the growth in excess of 14%, which is the higher end of the industry average, it is at a constant currency, not assuming any exchange rate changes.
Right. What about the pricing environment? Do you see some traction there as well?
We're seeing pricing in general to be in line with what we've seen in the previous years. There are some, and what typically happens is there are some contractual price increases which happen. There are some contractual price increases that are based on certain parameters, and wherever we've met those parameters, we've got price increases. So I think, and obviously there will always be one or the other customers or maybe even industries which will require some price correction on the downside, i.e. price decreases, because of some specific issues within those industries or within those customers. So again, I would characterize the current pricing environment as being about the same as what we've experienced in any normal year. Again, 2008, 2009, etc. were different years, but I'd characterize it as a fairly normal year for the pricing environment.
Krishna, morning, Neeraj here. In light of that, what happens to the EBITDA performance? You had a splendid uptick in EBITDA for FY12. If pricing doesn't increase, and I'm assuming that costs would not go down, at least your larger peers don't seem to be suggesting that. Do you believe you are at this 17.5, 17.75 kind of EBITDA performance for FY13?
What we believe is this year we ended at 17.4%. And what we're saying is we will be flat. So again, it could be anywhere from say 17 to 17.5 is really what we're thinking. And you're right, Neeraj, that costs are going to grow up. There will be some adjustments in pricing, like I talked about, which will definitely help. But again, there are a number of operating levers that we are working on, such as the pyramid correction, onshore-offshore mix, utilization, where we have some room for improvement. And therefore, we believe that, again, at a constant exchange, we will be at a flat margin for next year, which is right now with 17.4, so it will be in that range.
The other thing, Krishna, and I want to understand from a mid-cap IT company perspective, that there are polarized views that have come in, wherein companies that have declared numbers, it's been a mixed bag in India so far as the large caps go, but globally, Accenture, Oracle had fairly upbeat CY12 to point towards. You did mention that it will be a volume-led growth for you this time around. You mentioned that you will reach $1 billion in 3 years. From 1550 odd crores in FY12, in FY13, without getting into a specific number, you think by virtue of purely volumes alone and some adjustment to pricing, you can probably clock in a 20 to 25% kind of revenue growth, YOY?
Again, what we believe and what we're confident of is growing higher than the industry average. And again, industry average being 14% at the high end, we're confident of higher than that. Now, 20 to 25% growth depends on a number of other parameters. At this point, I can't really comment on those because there's a lot of external issues and so on. But what we are confident, again, is more than the 14%. Is it going to be 2025? That's on a very, very optimistic note. I would believe that it will be lower than that. So it will be somewhere between 15 and 20, broadly speaking.
Any acquisitions planned this year?
Planned, absolutely. But again, I'd rather not comment on that because acquisitions, as you know, tend to be very binary. They either happen or not. So again, there are a number of candidates in the various parts of the life cycle. But again, I'd rather not comment on it till it happens because, you know, there are acquisitions or potential acquisitions that, you know, have gone all the way till signing and then still not have happened. So what I'd put it as, you know, acquisitions have been an important part of our growth strategy, both for customer acquisition and for skill acquisition. So we will continue to do that. We will continue to look. But will it happen or not, I can't say at this point.
But what geographies are you looking at? What will be the size of this acquisition? What is your thought process as far as inorganic growth is concerned? And where does, you know, acquisitions really fall in terms of the overall strategy?
So there are two things that we look at when we are talking about acquisitions. The first is access to certain customers where we potentially can't get access in the current situation either because of existing suppliers or whatever else the reasons are. And the second is access to certain adjacencies in terms of skills. For example, we're a very strong mechanical engineering company. We're only now, or over the last 3 to 4 years, we've built our electronics capability, which is a very strong adjacency. We're strong in it, but we really want to improve our skills and improve our customer base. So in that case, we'd really look at, or one of the targets is acquiring an adjacency, in this specific case, electronics and embedded systems. So we'd really look at acquisitions as within our strategy and within our growth plans, where the gaps are and how we can fill some of these gaps. Now, where are we looking at these companies? It's primarily North America and Europe, given that that's where our market is and that's where we believe that we can significantly enhance our domain capability by acquiring talent and by acquiring companies in those geos. So primarily we're looking there. In terms of the ticket size, you know, typically we've looked at companies in the $10 to $20 million range. But what we believe now is that we want to look at some larger acquisitions. Perhaps in the, I think yesterday we said $40 to $50 million range is what the board deliberated and talked about, because we believe that the cost and the effort that goes into the acquisitions typically tends to be the same no matter what the size is, and therefore we're looking at larger ticket items at this point.